Jim Roemer, Dr. Weather. We talk about the soybean market explosion here today. But first of all, here's just how I forecast the weather. You want one of these shirts? If you're not a subscriber to Climate Intelligence, sign up for $2.99 a year. One trade alone, like being long sugar the last 2 or 3 weeks, up $2,000 a contract. Or short coffee calls last fall, making $5,000 to $7,000 a contract. Various moves in many commodities and grains and cocoa and natural gas. Pays for the service for years. This is an abbreviated service, Climate Intelligence, of our very exclusive Weather Wealth newsletter sent out about 3 to 4 times a week to farmers and traders, hedge funds all over the world. So for $2.99, I will get you one of these shirts. Just email Scott Matthews, my editor. If the shirt's wet, it's raining. If the shirt's dry, it's not raining. Right? It's warm, it's sunny. Anyway, let's talk about El Nino right now in some of these markets. So our two biggest recommendations really over the last month or so has been in European corn, which is bringing up our corn market here in the United States, as well as tight stocks and better demand and some minor weather problems, kind of trendline yields here in the United States for corn. But look at this explosion. This was as of about a week or two ago, a couple of weeks ago, about a 30% move in corn over in Europe. The main trade here, I can't give advice in everything for $2.99 a year, but about a week to week and a half ago, recommended buying sugar. We have these spiders for many commodities around the world. And again, if you subscribe, we put these on there every once in a while for corn and soybeans and cocoa and coffee. Overall sentiment, looking at the anti-herd mentality, how many people are long or short, economic score, the value of the dollar, things like that, the Brazil real, pattern recognition, the charts, and the moisture index and global crop score, bullish for sugar. And we've seen about a 10% rally here in the ETF, cane, and about a $2,000 per contract move up here in sugar in the futures market over the last week or so. So let's talk about something here with soybeans. So about 3 weeks ago, everyone was talking about a hot, dry dome and disaster to the Western Corn Belt. I said it's been these 4 years on the left, 83, 88, 2011, 2012, that were the major bull markets in soybeans during late July and August. 83 was a weakening El Nino. The other years there were a strong developing La Nina, and there have been other bull markets, of course, in the summer, but for the most part, I was predicting excellent rains in the Midwest, and indeed we've had that, but it's been too much of a good thing, and that and Chinese demand has helped to rally beans back here about 40 to 50 cents over the last few days. Look at all this flooding in Indiana and Ohio and Illinois over the last a week to 10 days. Again, I was correct, forecasting no extreme heat and rains for the Midwest. This situation is like once every 20 years as far as seeing heavy rains across the Midwest grain belt. Look at these rains last weekend in yellow there. Look at that. In Illinois into Indiana, 2 to 4 inch rains. Some places, 8 to 10 inches over the last couple of weeks. And remember, soybeans are really a dry weather crop. They don't want a lot of rain during the month of August, okay? But we also don't want hot temperatures. Some of this concern and some of this rally in beans here the last few days, waterlogged soils in parts of Illinois and Indiana, some root damage is possible, minor flower and pod loss. So we're seeing yields maybe 51 bushels per acre versus 53, 53 and a half the last few years. Is that really enough to get a major bull market for the rest of the year in soybeans? I'm not quite sure, but we'll be having updates for Climate Intelligence subscribers coming up here over the next few weeks in various markets. And our forecast for harvesting corn and soybeans will be very important with El Nino as we get into later September and October. So here's the weather pattern now. Look at that 94 dome in the southwest like I predicted 3 weeks ago. All this talk of heat and dryness, I said forget it. Look at the red block there over Alaska in red. That forced the jet stream south. Look at that in the east there, the northwest flow, cool and blue. See that? That's pushing the ridge to the west. That cooler weather in the east should prevent natural gas from rallying very much with no hurricanes in the Gulf Coast and an overall cool pattern. Look at this again in blue, right? As we get deeper into August, bang. So the northwest flow should dry out the corn and soybean belt. Will it be enough to create A bear market again in grains. Well, there's really been a lot of demand going on right now. This was my forecast, being bearish a few weeks ago when I saw the droughties in the Midwest in combination with very weak exports. Look at that. Some of the lowest exports in 5 to 10 years up till this last week or two. And China's starting to buy some beans right now. So we're seeing this move up in soybeans also because of a seasonal. In 12 of the last 15 years, soybean prices have gone higher into September, late August, as you see there. And then in September, market tends to go lower. And that could be the case if we have cooler, drier weather for the Midwest grain belt, right? And we have harvesting going on okay as we get deeper into the fall. Then it's possible that soybean prices will top out as most of the shorts are actually out of the market right now. Again, subscribe to Climattelligence to get occasional trading ideas. Again, my most recent one was in sugar about a week to 2 weeks ago, which has soared. Want more updates for grain weather, cocoa, coffee, natural gas, you name it. Enjoy. Have a very nice week.